Hi Masters Advanced Accounting class. In this video, we're going to go over how to do a translation and a remeasurement of a multinational corporation. So up to this point, we've done consolidation with just US dollars, but this particular problem that I'm about to go through, they are going to have you remeasure and translate into US dollars. Okay? All right, so the problem that we're looking at is the following. On December 18th, 2020, Stephanie Corporation acquired 100% of a Swiss company for 4.0 million Swiss francs. CHF, so the acronym for their local currency, the Swiss francs, is CHS, which is indicative of a book value and fair value. At the acquisition date, the exchange rate was 1.00. So what does that mean? That is a historical rate. So when you translate and remeasure, you have to use different rates. Historical rates are the rate that you acquired at that time. So you acquired, in this case, their common stock. All right, their owner's equity. That's what that historical rate was, 1.00. Same thing when you remeasure is historical rate. Now, remeasurement is more difficult, and here's why. When you remeasure into a local currency sub into a US dollar sub, that means that that particular country has had hyperinflation for 3 consecutive years. So in order to not make the income statement and balance sheet extremely volatile, what they do is certain accounts you are going to use in a historical rate. So when you remeasure, for example, so notice the first part is translation. They use the spot rate, but when you remeasure inventory and property, plant, and equipment, you will use in a historical rate. So that is the rate that was in place at that particular time. Okay? It will change as they acquire more property, plant, equipment, or inventory, but for right now, you will keep that at that historical rate. Okay, so let's read it through. All right, here's what I'm looking for now. I am looking for the spot rate. So the spot rate is whatever the rate is at that day and time that you're going to translate and remeasure these financial statements. I worked as an international accountant, so I am very comfortable with this area with the different rates. So I'm looking for the spot rate. Okay, so here's what it says. December 31st, 2020. By that date, the Swiss franc had appreciated to $1.10. Okay, that $1.10 is the spot rate as of December 31st, 2020. And that's what you will do this remeasurement at. The date is December 31st, 2020. So the spot rate is $1.10. All right, let me go to the board. So I started this for you. Here's their balance sheet. They have cash, inventory, property, plant, and equipment. They have a total. Then they have notes payable, owner's equity. Notice that there's this translation adjustment. That's when you translate. So when you translate a subsidiary that does not have hyperinflation, you will have a translation adjustment. What are examples of countries that do not have hyperinflation? Canada is one. New Zealand, Australia. The EU, they try to keep that at a common rate. However, what type of countries would have hyperinflation? Mexico, Peru, Brazil. Those are different types of countries that you will learn, you will remeasure. All right, so let's look at the rates. So the first one I'm going to go over is this right here, the translation. So the translation, if this was Canada, have cash, and then you would multiply it by the spot rate at that time. Here's the US dollars. It's probably not Canada, right? Because it will be less, but to be honest, I don't know what Canada's rate is at this point in time. You guys, somebody could check that. Inventory, again, the spot rate, the US dollar is 1,430,000. Property, plant, equipment, local currency is 4 million. When you translate it, it's 4,400,000. Okay, next. Total your US dollars. You have to total your local currency as well. But this, everybody watch, you're not going to multiply that by a rate. You have to multiply by each individual layer. So you've got 6,710, that's the total assets. I'm going to look at that, go back to that in a minute. Next, we have the notes payable. That will be the spot rate. You get 2,310,000 when you translate it. Owner's equity. This is an historical rate. So let me circle. That's a historical rate. Don't forget that. 4 million, whatever the rate is at that time when they acquired the subsidiary. Well, it's exactly the same, 4 million. Okay, now I'm going to show you how to figure out the translation measurement gain or loss. All right, so here's how you do that. Let's get the total assets. Let me star that. And we're going to do the basic accounting equation. Total assets equal liabilities plus stock equity. Okay, the total assets after we've translated are 6,710,000. All right, now I'm going to add my liabilities plus my stockholders' equity together. And when I do, that equals 6,310,000. Okay? All right, we're not balanced. We're going to take the difference between the total assets and the stockholders, the liabilities plus stockholders' equity, and that is 400,000. Okay, next, you have to determine whether you have a gain or a loss. Well, what do I have to do in order to, and you're always going to start with assets. Always start with assets. That is your main focus, 6,710,000. Well, what do I have to do in order to get this 6,710,000? This is a gain. I will add this. All right, so I'm going to add this, and when I do, then I will equal 6,710,000. All right, so now let me put it in to our equation. So I go back up here, and I have my translation adjustment, 400,000. Don't put a rate with that. 400,000. Then I'm ready. I total it, and like I double checked it, it's 6,710,000. Okay? So that's how you translate a local currency into a US dollar. All right, now, next, I'm going to go over remeasurement. All right, and what I do, let me erase this. So now I'm going to go over remeasurement. Well, it's going to be the same type of theory. However, let me point out, when you remeasure, I went over different rates, historical rates, okay? The reason being is it would be way too volatile. All right, so you notice here, you notice here. All right, so same type of deal. I'm going to take my total assets, 6,180,000, and I'm going to equal my liabilities plus stock equity. So I'm going to take my liabilities plus stockholders' equity, and I total those two together, and that gives me 6,310,000. All right, everybody watch. This is different than the last one. Well, look at my liabilities are more than my assets. My liabilities plus stockholders' equity are more than my assets. I have a loss. Take the difference between the two, 6,310,000 minus 6,180,000. Well, it's 130,000. What do I have to do to this number? I have to subtract. So this is a loss. All right, so I go over here, retained earnings. I have the remeasurement loss. I'm going to put this right here. All right, that's where I put the 130,000. Make sure you put that in parentheses or the Connect will mark you wrong. You draw a line indicating you're going to total, and when you do, now it's going to equal that 6,180,000. Okay, and those are your final totals. Final total. So that's how you remeasure a simple balance sheet, or you translate a simple balance sheet. So understand what you're doing. Please read my PowerPoint on translation and remeasurement, and you'll be good. All right, I'll see you soon.